Hello everyone and welcome to the Investing Angles channel. In today's market waves, we'll discuss multiple things. First, we'll start with volatility and we'll evaluate volatility index itself and volatility futures. After that, we will do an excursion into TLT and yields. We'll see how they are behaving after today's move and what are the perspectives. After that, we'll hear a candlestick story about the major US indices and the Elliott Wave perspectives for S&P 500 and Nasdaq. Then we will move into the S&P 500 sectors and major stocks. Also, this mostly will be discussion from the candlesticks perspective. After that, we will have two special features of the day. We'll discuss Exxon Mobil and Blackrock. All right, so before we get started, make sure to subscribe to our channel and support us with your likes. Share the word around, follow us on different platforms. We are present on Reddit, on Twitter, and on Telegram. This is the candle chart for today, the daily candle closure. So what we are seeing today is that we have for volatility, we have three red candles in a row. However, none of them was able to close below the previous candle low. And I would say that this Friday's candle, the green one, the big one, it's a bullish engulfing. It's a full standing bullish engulfing. And these three didn't cancel it at all. Moreover, I think that they formed so-called rising three methods, potentially rising three methods, and the resolution of this candlestick formation goes upward. So maybe we'll get another day or two of moderate moves here within the green candle body, and after that we will see a strong move upward, which could happen today or on Friday. That's the perspective from the volatility index itself. And speaking about the futures, we're seeing that it is closing with a red candle, which is engulfing for the green one. Well, most possibly tomorrow we'll see lower lows for the futures and for the index. However, it's interesting to note that while the candle is red, we are seeing this one. This is a very strong 8 by 20 EMA bullish cross, and the chances for a continued move higher are very significant. In addition, we are having very freshly made MACD bullish cross. So the indicators, these and a few others, support a move upward. So that's the volatility. Now let's move on to the TLT. What TLT is saying us. So this is the chart that we shared a couple of days ago. This was the original one, February 7th. We were saying that TLT didn't form a fairly strong impulse upward, so most likely this is going to be a bearish flag or something like this, a corrective wave. Indeed, it looks like it's a bearish flag, and now TLT has broken through the lower boundary of it, and an interesting point that it goes in impulsive fashion. So this is the chart that we shared just 2 days ago, the perspective impulsive wave. So far it is following it nicely, possibly formed very well shaped wave 1, corrective wave 2, and potentially very well shaped wave 3 here. So now there is a chance for slightly bigger wave 4, which might find support at the level of wave 4 of a smaller degree, and another wave down. It's interesting that somebody called this a contrarian thinking, but anyway, at least I have been consistent. And speaking about the consistency, this is our chart I'm not showing it very frequently, but nevertheless, this is our chart that we've been tracking since November 15, 2020. And this was the initial call, and since then we have been bearish. Can anybody else says that they've been bearish on TLT since 2020? Well, that's the original chart that we shared on one respectable, very respectable board led by an Esquire, and this chart was tantamount to blasphemy when we first shared it. And well, since then we have been bearish. TLT long-term chart starting in 2020. Today is February 12, 2025. We are seeing that the chart, and this is an interim version which we shared in October 14, 2022. So far these markers worked perfectly. That's the perspective for TLT for now, and we wouldn't be surprising it if it moves below the 88 and ends somewhere here in this rectangle, most likely 61 to 50. But that's a long-term story. We are going to monitor it on a daily basis anyway. Well, that's TLT, and now let's have a look at TLT candles, what they are telling us. Today's closure was likely bearish, and this candle, while it might become a morning star, however, we are not seeing a lot of support for this particular formation. And if we look at the 2-day frame closure, this is it. This is a very strong bearish continuation candle, which points further downward. And the weekly frame so far looks extremely bearish. If in 2 days nothing happens in the Treasury Department, this is going to be it, and will continue. This will likely launch another wave down towards 84 and lower. That's the perspective for TLT. Let's now have a look at yields. So this is a 10-year yield. As we mentioned yesterday, it formed the bottom on the daily frame, and expectedly today it moved higher. And if we look at the 2-day frame, it's not closing today, but tomorrow, if it does it like this, it will be technically a repeat of this of the daily frame. And I would say that if it moves a little lower tomorrow, it will be 3 white soldiers on the daily frame. And the weekly looks bullish so far. A closure like this will open a path towards higher high, and the rates 4.85 should be a surprise at all. And looking at the bigger frame, just a few days ago we mentioned that US 2-year yield is set for a move to 4.4. The only thing we didn't expect it to move in just one move there. And well, that's quite an impressive push here, and I would say that the candles itself found the support at 200 days moving average, which is a strong bullish signal. And just to reiterate, we have a freshly made bullish cross 100 over 200 days moving average for a 5-year yield, and it joined the party of 10, 20 and 30 years, which made these events earlier. Now let's have a look at let's move on to the indices. So what we are seeing here, an interesting, very interesting closure, especially for S&P 500 and Nasdaq. What we are seeing is 3 green candles, and technically they are losing and losing and losing. And the Friday's candle, huge bearish engulfing here and here, it still stands. And I would say that this is right now there is a possibility of falling 3 methods. This is an opposite candlestick formation that we've seen for volatility. So that's it's somewhat unusual, but it's still valid. And the chances for a move lower here are significant for S&P and QQQ. For DIA, Dow Jones, a fairly similar formation so far. This candle is at best neutral. at best neutral, because we still have this particular formation. This is called the tower top, and it is standing right now, so it is active. And for IWM, I think the situation is the worst here. Technically, yesterday it had, oh, this is a 2-day frame, pardon, I need to show 1 day. So 1 day is not very conclusive here, but if we look at the 2-day frame here, that's a very strong message. This is a bearish engulfing, and this is a confirmation of this bearish engulfing. So will IWM or Russell serve the harbinger for the whole market again? We'll see. That's a very good perspective, and this is the 2-day frame for all indices. What we are seeing here, that at best SPY and triple Q are neutral, although the technicals are still somewhat bullish but not strong enough. Dow Jones is neutral, and IWM, I already discussed it, it's bearish. Now let's have a look at the futures. Futures are very interesting. First of all, S&P 500, yes, this is an inside down, or an equivalent of a bearish engulfing. The chances for a move lower are significant for the next couple of days. Nasdaq is still is neutral. It's neither bearish nor bullish. Dow Jones is forming a bearish candle, and Russell on the daily frame, if it closes below the Monday's low, it will be strongly bearish. If it doesn't, well, it's still a bearish candle, bearish formation, but the confirmation comes after the closure below Monday's low. Now let's have a look at the other charts that we usually discuss. This is the technical MACD cross 10-day frame, and we are still waiting for the final candle to close. It is closing on Thursday, tomorrow, and it will be a very strong event. In general, we might have a clear differentiation between these two, what we expect here, whether this cross repeats this scenario highlighted here in blue or in red. Which one? I don't know this, but we'll see tomorrow. And now let's have a look at the bigger chart. This is our long-term chart for S&P 500. There are no clarity yet. So these waves are corrective in both directions, and it still can be green wave 1, 2, 3, 4, 5 here, or it could be an impulse down, as shown here in the red. And I would say that this 5809 would be a critical level to path. If S&P breaks through this level, then the red path will be established, and for much lower prices. And speaking about this wider frame, what we are seeing, all technically all paths remain, all counts are on the table. The blue one, A, B, C potential ending here and continue the rally. The purple one, the worst case scenario, it's still on the table. So it could be wave 2 here, and very sharp wave 3, wave 4, and wave 5 down there. So that's let's make some timing adjustments. That's the perspective. And also on the table remains the potential for ending diagonal with hitting all-time high. So far, this wave is corrective, and the only way it can go upward here is to form a diagonal of some sort. This diagonal would be quite extensive, and it might take another week or two to complete. That's That's for the S&P. Now let's move on to the sectors. What sectors are telling us is there is no clear bullish candle at all. So everything looks at least neutral or even bearish. So none of the candles were able to make new higher high above yesterday's high, and these are considered at best neutral. So right now we are looking for confirmation, and I would say that the bearish ones fairly clearly is consumer discretionary. They formed an in-neck pattern, and XLE energy sector formed a tower top. This is most likely a reversal, a big one. And every time energy sectors form something like this, we are looking into Exxon Mobil because it's a main contributor to this sector. So this is Exxon Mobil. What you're seeing here, it's a terrible, terrible closure today for Exxon. A big candle and the loss of 50-day moving average on the daily frame, and on the 2-day frame it's a strong bearish engulfing with a loss of 3 support levels. And now let's have a look at what we are seeing here. This is our chart. Oh, let me open the mass. So what we are tracking here since October, Exxon has been developing a wave, potentially wave down, and now if it moves a little lower without crossing the bottom of wave 1, it will form an impulsive wave. And in this case, this blue count will be invalidated, and because one simple reason, a triangle ABCDE, as I'm shaping it here, cannot have an impulse inside. That's a rule. And in this case, we will be looking for this count. So potentially Exxon made a wave 1 here, a big one, which it started in 2020, in March 2020, and now it is time for a big reversal. So in this case, that could be wave 1, wave A of a bigger wave 2, then corrective action, and another wave B, and another wave C of 2, with the most typical levels here between 78 and 50. All right, so that's for Exxon Mobil. Now let's have a look at the other big players. So what we are seeing here is an interesting thing. So the many green candles, but they are losing. In this case, we'll look at the 2-day frame. For Microsoft, it is going down. So far this candle is not doesn't show intent for reversal. However, we'll be monitoring it anyway. Amazon is bearish, and it is moving down. The candle on a 2-day frame is also bearish. Apple is moving higher. However, the wave here is not exactly impulsive. We'll see how it develops, and we shared recently an update on Apple on our website investingangles.com, so you can check it. I think it's even free for those who registered as readers. And Tesla had a good chance today to form a reversal candle, but I think that the latest push didn't make a difference, and now it's on the 2-day frame. It's continued down. Yesterday we posted a video on Tesla. If you're interested, you can watch it. It has short and mid-term targets, so every specifics is there. Meta looks bullish so far, and NVDA NVIDIA surprisingly lost today, and if we look at the 2-day frame, it formed a bearish harami, and it was held within the body. Very interesting candle. If we see a confirmation in the next couple of days, I mean bearish confirmation, that would be a reversal, and I can see that the NVIDIA is still struggling to get over this big red candle which it received at the end of January. Google, from the daily perspective, it's neutral. From the 2-day perspective, it's bearish. And Berkshire, so let's see what they're saying. Okay, so this is expected move after failed DCC, dark cloud cover. It formed one small green candle. Perhaps it will form another or even 3 before actually moving lower. This is a good chance for bears. Very good. Now let's move on to Nasdaq. Nasdaq is no changes here on our frame, and today's move didn't add any clarity. So far we are seeing corrective waves in both directions, and this is a possible target for a blue count. It's still on the table, the red one and the green one, a diagonal, fairly similar to the one that S&P 500 is forming. So no news here. We're still pending for a decision. And the final feature of our today's discussion is Blackrock. So what we are seeing here, so the giant is forming a very bearish moves. So it flipped 8 by 20 EMA line on the daily frame. Now it did the same on the 2-day frame, which elevated the bearish shorts. Now it lost the 100 days moving average. And this one I'm talking about, the 100 days and the 50 days, both of them. And they are curling towards a bearish cross. Very interesting. Perhaps it's going to happen in a couple of days next week or the week after. After a very strong bearish closure of last week, inside down, so far BlackRock is on track to confirm this, and it might lose a big 20 weeks moving average. And the most critical piece is here. This is the 10-day frame, double the size of the weekly. And if it closes like this, it will be technically a repeat of weekly of previous week, but with much higher bearish odds. And if we look at this candlesticks from that perspective, so this could be a double top. This could be a double top. If we see a closure below this, below the neckline, then we might see something like this. And only after that we will get a reversal, and we can measure. So this would be our neckline. Potentially this is a neckline. Let's do the quick estimate here. Potentially this is a neckline. Now we have single distance, and we can have double distance potentially with the double top like this. So a double distance wouldn't be a surprise, and this in this case something between these lines, we might see a reversal. So first of all, potentially it's going to be a move here, and okay, let me break some, put some targets here, and this is too much. Perhaps something like this. Well, that's the perspective for BlackRock. Just a very quick estimate of what it can do in the next couple of months or quarters. So this is, remember, this is a 10-day frame, very strong, very big, double size of the weekly one. All right, so that's all for today. We covered volatility, TLT, and yield, major US indices, their sectors, big stocks and discussed Exxon Mobil and Blackrock. If you enjoyed this discussion, just say so. Share the word around. Support us with your likes, with your subscriptions for the channel, and you can also check our website investingangles.com for a free reader subscription, which allows you to read some articles, some select articles. Thank you very much for watching, and happy trading, everyone.